Hello Mavericks, this is Imri and welcome to today's currency recap. It is Thursday, October 26th. So today we'll be doing a review of the trading day. First, we'll be covering some meaningful news which came out, specifically today related to GDP. We're going to take a look at the broader equity markets, some commodities as well. We're then going to be doing some technical analysis on the major indices, taking a look at our proprietary currency baskets and seeing if there's any major news to end off the week. And then finally, we're going to be taking a look at some trading setups in the crypto and foreign exchange markets. Let's get right into it. In this currency recap, we will be using some advanced technical analysis. We believe technical analysis is the fundamental skill for every profitable currency trader. Maverick Currencies is currently hiring serious technical traders for a trader position. Traders will trade firm capital and keep 70 to 80% of the profits. If you're a technical trader with a technically based trading system, we want to meet you. Click the application link in the description below this video. Now let's break down today's market action. Market analysis. So the big news of the day is that GDP growth came in slightly hotter than expected. And the reaction to that was bearish. Why is that? So the reason for that is because if you think about it, a hotter economy is not what the Fed wants right now. In fact, Powell has come out and outright said that we need some economic pain in order for inflation to come off. So a hotter than expected GDP reading just adds credence to this thesis that inflation is very sticky, it's not going to come down, and rates are going to remain where they are, if not go higher in the near and intermediate terms. So the market sold off as a result, and the NASDAQ is now officially in correction territory. I personally don't put any stock in that. I think that's an arbitrary cutoff, but there you go. That was the headline for today. So in terms of the day's performance, we're down across the board. Equities, crypto, and commodities. Not a single asset class was spared today. In terms of fiat currencies, the commodity currencies led the way, specifically the Aussie dollar and the Kiwi dollar. The Canadian dollar was actually down on the day. So that's a funny bit of irony there. That commodities are down, but the actual, what we call some of the commodity currencies are up on the day. Pound is also up on the day. I wouldn't read too much into these percentage moves today for a lot of these currencies, and you'll see what I mean when we go through the baskets. Otherwise, the euro and the Swissy down. The dollar more or less flat, and the yen slightly down as well. Taking a look at crypto, ETH has performed the best, being relatively flat, whereas Bitcoin Cash was the biggest loser, but Bitcoin itself and Litecoin also slightly down on the day. Again, I wouldn't read too much in these percentage moves in crypto as well, because the crypto universe, as pretty much as a collective whole, has experienced a pretty nice pop over the last few days. Taking a look at the market outlook, traders, that should be a -3. We are below both moving averages, and the slope is veering negative. So we're in clearly negative territory here in the markets. I've been looking for a bottom. I've been calling for a bottom. That call was just flat out wrong. But I'm still more bullish this market than I am bearish this market. And I think we're very close to finding a tradable bottom here. Now, I'm not as outright bullish as I was last week, where I thought we'd be hitting pretty extreme levels to the upside in the NASDAQ and the S&P, but I do think we're going to get a reasonable bounce here. We are pushing some limits in terms of some of my more bullish outlooks in the equity markets, so that has to be said. So I do believe caution is warranted, but I think playing the downside here, that trade is likely to lose steam. We'll have to see what tomorrow's trading brings, of course. In terms of news for the day, we have the core PC price index in the US and consumer sentiment, revised consumer sentiment coming out tomorrow morning. So just keep an eye out for that. The PC price index could potentially be a market mover. Okay, moving on now to some currency analysis. On the velocity score side of things, I've got the dollar at a +2, the pound and the New Zealand dollar at a +1, but that's kind of deceptive. And then on the negative side of things, we have the Swissy and the Loonie. Crypto is kind of all over the place. ETH and Bitcoin are actually holding up pretty well, whereas Litecoin and Bitcoin Cash are looking a little more bearish. Okay, so let's now jump into TradingView and take a look. We're going to kick things off with fiat currencies, and then we're going to move on to crypto. So with the Japanese yen, we just haven't gotten the kind of upside acceleration that I would expect once we've broken out of a falling wedge. So I'm now fairly neutral on the yen. I still would favor at least one more new high above the high from the beginning of October, and then I'd be open to a more bearish scenario on the yen. But if we break decisively below this supporting trend line here, let me just zoom in on that, then things are going to look pretty bad for the yen basket. So if we take this trend line out convincingly, look out below. The dollar just keeps on ticking. I really thought there was a chance last Thursday that the dollar rally was over. And then, on Thursday, October 12th, we had this large bullish candle. And then we started trading higher, pretty much higher ever since. We had a slight intermediate base here, and then we popped higher. Yes, we pulled back today, and diving into an hourly chart, you'll see that this pullback is fairly controlled, in my opinion. If I throw on some moving averages here, specifically the 20 and the 50, you'll see we're between both on the 1 hour chart. The 200 moving average is below as well. And on the 4 hour chart, the moving averages look pretty bullish. On the daily chart, they look bullish as well. So I just don't really see too much of a reason to bet against the dollar right now. That doesn't mean that I would buy it against everything, but I'm just saying if you're looking for a liability currency, a currency you want to be short, I don't think the dollar is it necessarily quite yet. Here is key support in the dollar basket. So that's the low from October 24th, Tuesday, October 24th. This is what I would consider critical support, which is the low from Tuesday, October 10th. All right, so we've got 2 Tuesday swing points, key support, critical support. Key support is where I'd expect the market to find support, maybe exceed it slightly and then start turning up. Critical support is if we break that, that's a strong warning, that we're looking for a reversal in trend. Okay, the Swissy. So I gotta say, this formation in the Swissy so far looks like a controlled pullback, in which case the Swissy should rebound and we should get more bullish price action. I'm a little bit taken aback by the Swiss franc strength. It's interesting that it's the Swissy attracting investment flows and not the Japanese yen. I'm not saying that it's obviously not a significant anomaly. The Swissy has traded in a similar pattern in the past as well, but I'm getting very wary of the Swiss franc strength. I think the next big move in the Swissy is going to be Swiss franc weakness, not Swiss franc strength. But as I mentioned, warning signs were overbought here considerably on the daily chart, but on the 1 hour chart, this does look like a fairly controlled pullback. I'll give you a key level to look for if you want to buy this on a breakout. It would be taking out the swing high from Wednesday, October 25th, which comes in at 142.98 on the basket. Similarly, if I draw a channel here and you want to play the downside, I'd really want to see a convincing break through the lower boundary line of this support channel in order to short the Swissy. Moving on to the euro now. So we bounced out of support and we went a lot higher than I thought we would. Now, if I throw some Fibonacci levels on this decline, we've brushed through the 61.8% level. We have not quite reached the 78.6% Fibonacci retracement level. It's possible that the rally in the euro is done. And what would be good evidence of that would be a break below the supporting channel here, in which case I'd expect us to trade back into this green support zone. The pound, although it's up on the day, the pound structurally looks very weak to me. We're below this important resistance area. We might trade back into it slightly, but I'd expect us to break down below this channel in fairly short order, which would lead to a more bearish opportunity in the pound. This is one of the more clear trades to me. As far as the currency baskets go, I want to be short the pound once we break out of this channel. Canadian dollar has followed the script really nicely, still bearish. Next objective for the bears is to take out this level of support right here. If we can take that out, that is a great initial sign that bears are back in control of this market. I'm eventually expecting us to test the lows from the beginning of September, which would be a big move from where we are now. and then eventually test the lows from July, middle of July. Next up is the Aussie dollar, which along with the Swiss franc has surprised me quite a bit. We got some bizarre price action, up, down, up, down, up, down. I still think the Aussie is bearish, and I still think we need one more leg. So if you haven't been whipsawed enough by the Aussie over the last few trading sessions, you know, I have been on a couple of trades with the Aussie dollar, but I'm still sticking to my bearish bias here in the Aussie. I still think we're going to break lower. I'm just looking for that right setup now. Similar story with the Kiwi. I still think we're going to go lower, but the Kiwi's been a lot weaker than the Australian dollar in recent days. And I expect that trend to probably continue. So I'm looking for the Kiwi dollar to at least test these significant swing lows from October 2022. All right, last up, we're going to take a look at crypto. So this crypto basket does look a lot like Bitcoin, all right, which shouldn't be a surprise. So what we've had here is a really nice breakout, I wouldn't chase this move. Look at how overbought the RSI is on the daily. What I would like to see is a nice controlled pullback in 3 waves. Let's take a look at our moving averages. So we've got the 20 and the 50, and we're very far away from both. If I'm looking at roughly the midpoint between both moving averages, we're currently 20% away from them, if you want to consider those the mean. So what does that mean? It means that I would really avoid rushing into Bitcoin right now. I'd let the pullback play itself out, and then look for a trend continuation pattern to buy Bitcoin higher once we get that. All right, traders, that's it for now in terms of currency analysis. Hope that was helpful. So in conclusion, as always, just play relative strength and weakness. So important, but play relative strength and weakness on your terms, on your time frame. You know, if you're looking at relative strength and weakness in terms of what happened today, but you're more of a long-term trader or a swing trader, that's probably going to get you chopped up. On the other hand, if you're looking at relative strength and weakness over a daily chart or a weekly chart, but you're more of a day trader, that's also it might possibly get you in trouble as well. So just make sure that when you are assessing relative strength and weakness, you're doing it on your terms. And of course, always focus on proper position sizing and always follow your trading plan, which is by far the most, the best thing you can do to set yourself up for consistent success as a trader. All right, folks, that's it for me for now. Look forward to seeing you next week. Take care. Happy trading.